I always ask you this, but how out of whack does it look to you now that we've seen, like, how out of whack are the valuations? Any dislocations now that we've seen continued carnage in your sector?
Yeah, we've seen a heck of a lot of dislocation in the space. Okay, we started off with some pretty aggressive valuations. We began the year not knowing just how aggressively interest rates would be rising, not knowing how high inflation expectations and real inflation would be rising, and not knowing how close we could get to a potential recession, maybe in the back half of the year or next year. So economically, macro things have changed dramatically. The e-commerce companies, I look at what's happened to earnings estimates and revenue estimates. Those are the ones that have been checked the most. They've come down the most, both on the revenue side. There's been a softening there, but especially on the cost side. Amazon gave you that in droves when they talked about the shipping and the fuel costs, how that's really spiked up and brought down their profits. The one place that's been safer, the companies that have reported this week, Airbnb, Booking, Uber, DoorDash, they all had positive estimates. All of their estimates went up, but only one of those stocks actually traded up on the print, and that was Booking, because it's what I call this Venn diagram stock, because it's got a reasonable valuation, very strong P&L and balance sheet, and it's trading close to a market multiple. There are very few places to hide in consumer tech right now. I think this is maybe one of the few places to do it. It's unfortunate, but that's the reality.
Bookings, any others? DoorDash is only down 1.5% now, but to your point, it was a good quarter.
Yeah, so you're not getting paid for good prints. So you want to stay as defensive as possible in the consumer internet space that I look at. It's not a defensive sector, but the names that'll hold up the best are the highest quality assets. I still think that's Google. I still think that's Amazon, and I throw out a Booking as an idea too. Now, this is going to change at some point. We're not going to stay in this environment, and when it does, I think there's some wonderful reopening plays. I think you want to be long Uber. I think you want to be long DoorDash for when we start moving back to growth equities. I don't know when that is, but when we do, these companies are showing improved fundamentals this year. You want to be long those names when that turn in the market comes.
Are you having any conversations, Mark, with different sorts of investors, value investors, for instance, and names like a Google or an Amazon or a Meta as these stocks have been shellacked? Are we at that point yet?
I think we have actually. I think we are close to that point. I have had those kind of calls. They first started coming in on Facebook earlier this year. I mean, this thing's trading at a discount to the market, a PE multiple. It's a discount to the market. So if you don't think they can solve the Apple privacy issues, if you don't think that they can address the TikTok issues and better monetize their Reels asset, I think they could do all of that. And if they can manage their cost structure, and there's more evidence that they're willing to bring down their cost structure as the top line gets softer, I think value investors find that more attractive. So, yes, we're starting to see value investors come in on that. On Google, too, I think that's been the case for a while. And I think we could just start seeing that with Amazon, too. Look, these are three assets with an enormous amount of cash. They're buying back a lot of their shares. They're bulletproof business models. I mean, not in a recession. Nothing in this group is bulletproof in a recession. But barring that scenario, they're bulletproof business models.